Hello, everyone, and welcome to today's NinjaTrader ecosystem event, Barbecue the Competition using DiNapoli leading indicators, fib levels, and trading patterns. My name is Patrick, and I am the NinjaTrader ecosystem vendor relations manager. Before we start the webinar here today, I do have some housekeeping notes for everyone. Secondly, this webinar is presented by NinjaTrader, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed towards the NinjaTrader brokerage. Lastly, if you are new to NinjaTrader, please make sure to sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link on the screen or by clicking the Get Started on the welcome once you get there. I did skip ahead a screen there. Before I turn the mic over, to Peter and Joe, it's important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Also, please remember that these training sessions are not a solicitation nor a recommendation, but simply educational in nature. Thanks again for joining us today. And without further ado, I'm going to go ahead and hand over the mic and the room to Peter and Joe. Thank you all.
So I'd like to welcome everybody. Great to have you here. We've got a bunch of clients that have come by, and there's new people as well. So welcome to everybody. I hope we do you some good. Peter, you go right ahead.
Yeah, welcome everybody. For me, it's almost good night over here. So at least I had a good afternoon nap, so I should be good for the next few hours, maybe causing some other people around the world jet lag, hopefully. But yeah, I'm gonna start off quickly with a few points I want to make and the agenda we want to go through today. So let me just jump right in. I'm gonna look at the history of Joe and myself, where we come from, what we've done. We'll be looking at risk zones specifically and how to use that to get in front of the competition. And then we'll be looking at our indicators, which will provide you with info for the next bar. So this is the nice part of the DiNapoli leading indicators. It not only gives you information on the current bar, it also gives you information on the next bar. We'll be diving into patterns as well. We've got 9 power patterns, which we'll talk about 1 or maybe 2. And then at the end, of course, we'll have questions and answers. So there's Joe. You just saw him on the video as well. Over 55 years of trading experience, trading the S&P since the futures launched. Joe, I think you traded Nifty 50 and some other stuff. You can tell us as well. Joe's book has been translated in 7 languages. He's talked all over the world. That's how I met him.
Peter, that's 12 now.
12 languages. Okay.
We got 12 languages, yeah.
So
all over the world.
12 languages, and then a lot of research done, which we'll be talking about today. And then a little bit about myself. I've been involved in the markets, actively trading for over 20 years now. It feels way longer. And then various financial instruments. I focus mostly on commodities and grains, but I do trade the financial indexes as well, and energy. I love all markets. So I'm a co-manager of a hedge fund down here in South Africa. Also have some commercial traders that I give advice and help them with their hedging strategies, etc. And I then also stem from a family of educators. My father was a professor here at the One University. My mother was a teacher. My grandmother was a teacher, etc., etc. So I believe this teaching is kind of in my blood. So I believe I've got the skill to teach this method, which is actually quite complex, in an understandable manner to traders just starting out, as well as traders several years into their career. So just putting that out there. Let's skip on and start out with the basics first. So FIB retrace levels, I'm sure most people are aware how they work, but just for those who don't know, you get a move in a market that looks like this, where you've got an upward trend, you've got a low and a high, and if you imagine it as a line chart, it looks like this, and then you'll basically just calculate 0.382 retracement of this whole leg up, and that's your 0.382 support node. And from this whole leg up, you calculate 0.618, subtract that from the high, that's your 0.618 Fibonacci support. So that's the basics. We call it the F3 support in short. So if I talk about F3 during the presentation, you'll know that's the 0.382. The F5 is the 0.618. Now, the time we have today is way too short to go into a lot of detail on how to draw these things. I've done a whole YouTube video that you can go and listen to on our YouTube channel, youtube.com/@DiNapoli618. And if I can quickly try and grab the chat window here, I'll paste that in there as well. Otherwise, I'll paste it a little bit later. Wait, here we go. I've got it. So let me quickly put it in there so that you can easily click on the link and go and visit that site. Then also on that site, there's a long video, over an hour, going into detail on how to draw these Fibonacci levels correctly, and also a little bit of the trade plan in a nutshell, if you want to call it that. So the link of that video I will also paste in the chat, so you can copy and paste that into your browser or a notepad and save it for later. And then moving on, that's the basic way to draw fib nodes. Now we go a little bit more advanced. You have a swing in the market looking like this, an up move, starting down here at the bottom. It moves up, makes a pullback, continues to move up. So we have got 1, 2 reactions going back. So what we do is we calculate the F3, which I told you is the 0.382, 0.618 of the small move. And then we also calculate the F5 and the F3 of the big move, going back from the top to the first reaction and the top to the bottom reaction, to give us a multiple series of retracements. And then when you have an F3 and F5 quite close to one another, you get what we call confluence. Now, this is a very, very strong support area. It's a DiNapoli support. That's where the DiNapoli levels comes in. And these are the important risk zones that I'm going to be talking about and showing shortly, where you want to act or not act. And then these arches, they're called lineage. It gives us a visual presentation of where the support's coming from, because you might get a different type move. Quite a big thrust move up might have stronger support than just a dwindling small reaction. So these lineage markings give us a visual representation of that reaction to tell us, hey, this might be a stronger kind of node or a DiNapoli support to be aware of. So you can see there's all kinds of small nuances that you need to learn when you delve into this method. Then also we look at expansion levels. We look at it in a particular way. You've got an A-B move like this down in the market going up to point C. You'll then calculate the A-B move and you project that down from point C for 100% projection called the OP, which it's the short for objective point, OP. Then you also calculate the 0.618 of the AB move, and you project that down from point C. That's the 0.618 expansion called the COP, contracted objective point. And then 1.618 of the AB move, again from point C, the expanded objective point, or the 161.8 extension. So that's the basics on retracements and expansions. As I said, in those links, you can go and look into a lot more detail on that. So there's one other thing we can calculate then. You've got an ABC into that retracement series that we talked previously about. and then you get your COP, OP, and XOP. Now, when you have an expansion joining a retracement, that's what we call agreement. And down here, you can see you've got an expansion together with a confluence. So that's a confluence and agreement. So that's a really, really strong support. Very strong support, very strong support. That's the DiNapoli levels for you. Okay, so let's look at how to use this and how to identify these zones ahead of time. If you look at this S&P chart, this is a quarterly chart of the S&P after COVID. It gave us an A, B, C, COP, OP, XOP. So we knew ahead of time back in 2021, if the market ever gets up to 47.52, there's going to be massive resistance. It's the expansion, the extended objective point, our DiNapoli resistance. And if we just look at what the market did when it reached up there, it retraced completely back to the OP, which it revisited because it was disrespected. So this was a high overlook view on the market, which we knew ahead of time back in 2021 about this massive resistance area. Looking forward once more, you can then calculate support using the same method. So you've got focus, reaction 1, 2, 3 with your lineage markings showing you F3, F5 for this one, another one F5, F3, another one F5, F3. You also have your A, B, C, COP, OP, XOP on this monthly chart. So once again, this zone standing out as a strong support, XOP, together with F3. Now let's look at what happened down there. Market came down right into that level before it started to rally. We knew about that level ahead of time. We knew about it back here when this point C developed in 2022. So the leading indicator of these levels is just phenomenal in giving you risk zones where you know, I don't want to be short here anymore, or I don't want to be long here anymore. And then also to change your view when you get trend changes, etc., which we'll show a little bit later, to maybe even try to pull back the other way. Then breakouts. This is the one thing where this leading indicator can really keep you out of trouble. So this was the Dow Jones. This is a daily chart, a nice breakout there with this trend line. And then, however, if you calculate your ABCs, you've got an A, B, C, OP, and there's specific ways of drawing this, which we teach in the seminars, etc. And then you've got another ABC up, a double OP resistance just above this breakout. So if you bought this breakout, you were buying right into a double DiNapoli OP resistance area, which is not the place you want to be buying. So look at that, right back, false breakout. So that, knowing about that zone ahead of time kept you out of trouble by not reacting to this breakout. So you can use this in conjunction with other strategies like breakouts or whatever you might be using right now to at least keep you out of trouble. And if you can start just avoiding a lot of losing trades, you're already well on your way to making money. So that kept you out of trouble, as I said. Here's another one. So this was dollar index monthly, no, I believe weekly. So you've got, yeah, weekly down there. You've got a nice trend line, a potential breakout. Let's first see if this breakout might be dangerous. So looking at our monthly chart on this dollar index, you had your focus reaction with F5, focus reaction with F3, and a very small ABC OP. It's a confluence agreement, which is a super strong resistance, which we knew ahead of time back here when this point C developed for the ABC, and back here at the high when this high developed in July of 2022. Now, this is a recent, this was this year in July. The market broke down. It came right into that support area. That's the zone, the risk zone where you don't want to be selling. And then it failed. It's not a surprise to see that fail. And you can go and have a look at the chart on the dollar index. We had a big rally up above these highs after this massive failure, which is actually another power pattern that we teach. That again kept you out of trouble. So very, very good to know about these zones ahead of time, at least if you're starting out to keep out of trouble and later on to start doing trades off these levels. Then looking at our indicators, I just want to show this one quickly. This is our main trend indicator, the MACD predictor. So what this indicator does, it gives you two levels in NinjaTrader. Now, we took about 6 months to convert these indicators from the other packages into NinjaTrader for NinjaTrader users to be able to use this. Now, this, not the indicator, the whole package that is. So this indicator gives you a red level and a blue level. You can change the colors if you want, but it gives you the current bar trend change on the MACD predictor, or the MACD actually, but it gives you the price level where the indicator will go into a buy in this case. But it also gives you the trend change for the next bar. So this is quite handy. It gives you that very important, if the market is looking like this, where it's coming into a MACD and you're seeing, hey, this is nearing the end of the month and we might be jumping in new bar right into a buy signal, it at least tells you, if you're short the market, be very, very careful. And then you can start monitoring the reaction to the signal. It's again a way to keep out of trouble. It gives you information ahead of time what's coming up. Then there's the two levels of the trend change, as I said, the red one for the current, the blue one for the future. And then we also have an overbought, oversold indicator, which gives you the overbought levels for the current bar, but going into the purple areas, it also gives you overbought and oversold levels for the next bar. So again, if you use this on a daily, you know exactly where overbought and oversold is for tomorrow. And this is very, very handy for end of day trading. You know where a profit target might be or a trade might be, looking at these overbought and oversold levels for tomorrow. Then on the patterns, Joe will also be talking about this, but I'm quickly going to discuss one of the patterns. There's 9 of them. They're all in Joe's book, Trading with DiNapoli Levels. And the one that we're looking at now is called the bread and butter. This is how it looks. So you've got nice thrust up. We define thrust by our short-term moving average called the 3x3. And usually after the thrust like this, you get when you get a pullback, the first pullback below the moving average is a buying opportunity, which gives you a shallow bounce. So this was a big pattern that we've been discussing for months, since 2022 in our newsletter. Those of you who subscribe to the newsletter know about that. And then if we quickly look at this chart, you can see the thrust, and we had our close below the moving average, which gives us our pattern. We expect a bounce. So where do we get that bounce? That's again where the DiNapoli levels comes in. You look for a strong support, maybe a confluence or agreement. So if we go back to our NASDAQ, you've got your focus, reaction 1, reaction 2, big confluence. That's the spot. That's where you want to be looking for the bounce. So this pattern gave us a good clue that we would expect a nice bounce from this area exactly to the low. It came down to that area. Now remember, we knew about this support area back at the highs here in 2021. Eventually, at the end of 2022, when it came down to support, we got the reaction. So you knew about that ahead of time. Now, where's the target? So there's the support area, the yellow box. The target's the 0.618 of the drop going back. So focus, reaction, there's your 0.618. That's your profit target. And looking at what the market did, bam, that's the NASDAQ. We've been discussing this, as I said, on the newsletter, which you'll find on our website for almost all of 2022. So a very, very nice example of how these power patterns can even help you on higher time frames to give you context of big market moves or overall movement, like a quarterly chart, to give you big levels where to do even 401k switching in and out of markets and using these levels. So before I hand off to Joe, there's a specific learning path that we've got. The recommendation would be to read the book first. This is the book. You'll see behind me here, I've got a whole bunch lying there as well. We've got plenty of those. There's the Fibonacci course. I've got one back there as well. We don't have a lot of that left, actually. Then the newsletter, which I mentioned, we've got that. It's a good source to use to educate yourself. We've got the seminars, the basic and the advanced seminars, which we're planning one around the end of February. If everything goes well in the USA, I'll be traveling there to do that. And then also we've got a client forum. We'll be chatting where you can ask questions. You've got 20 years plus of archives where you can go and view charts and chats and questions and answers on this whole method. So that's a really a good educational resource as well. And then, of course, the website, as I said, on fibtrader.co.za, there's a link looking like this where you can click, and there's more videos in there, more podcasts that we've done, a lot of free stuff that you can use to educate yourself on the website as well. As I said, and I typed in the YouTube channel, you've got that as well. You've got the link in the chat on that, actually, which I haven't put in on the slide. Of course, you've got the NinjaTrader ecosystem. You can go and look at for our indicator links up there as well. And then especially for today, or maybe I'll leave this until after you have spoken. Joe, what do you think? The special offer. Well, let's leave that until the end.
Okay.
Yeah, we'll do the special offer at the end.
Sounds good.
Before you start out, Joe, I want to try and do a live test, or let's call it a live demonstration of the indicators. But I think actually, like, I mean, I was going to try and use crude oil, but it's going to close in a few minutes, I believe. But I just want to demonstrate the clarity that you get using a Fibonacci tool like this versus a normal retracement tool like the DiNapoli indicator looking like this. And I'm going to keep it running for a while and let's see what happens. So this focus point will jump down automatically if the market makes new lows. If we make try and draw a retracement here, there's a retracement, and we can use this retracement. If the market makes new highs above this, the DiNapoli retracement, which is very quick to use as well, will jump and follow. So I'm going to try and see if this can work, but a better demonstration will be in very active markets, which we do at the seminars as well. And but this tool is dynamic. You don't have to go like with the normal retrace tool, pick and drag into new highs. It does that for you automatically. It adjusts the levels automatically as the market moves. So that's just one thing I wanted to point out. I'm going to leave the chart running. Joe, you want to hop back to, I think, slide 22. Is that right?
Well, I just wanted to emphasize the point you were trying to make. People that haven't used the indicators don't realize the high quality capacity they have, especially for short-term day trading. I've been trading the S&P since 1982. In fact, the first day it came out in 1982, I was trading, and I've traded tens of thousands of S&P contracts on every time frame you can imagine, from 1 minute on up. And having high quality leading indicators, in my opinion, is the only way you can deal with these algos that are out there. They will cut you to pieces if you don't have the ability to get these numbers, get them quickly, get them digested, and get your order in. All that has to be done in seconds. You can't be playing games with half-assed indicators. You have to have the right thing. So, Peter, I was answering a few questions. Did you go over that market bottom in October of 22 in your presentation?
I've got this one first. Do you want to talk about this, or shall I?
I do, but I was just wondering if you already went over the market bottom. In
it was this one, the confluence support.
Right.
Yeah.
Okay, so I just wanted to mention that this is the baboon's rear end of market bottoms. And why do I say that? Because it's absolutely unmistakable. that thing, we had quarterly, we had monthly confluence levels, agreement levels, and we had them across the board. We had them on the S&P, we had them on the NASDAQ, we had them on the Dow. This was the absolute clearest market bottom in 55 years of trading I have ever seen. So, I mean, to have value in a set of indicators, be able to actually make trades, valid trades on indicators, it is worth having the right indicators. I mean, you got to have the right tools. I'm a mechanic. I work on classic cars. I've got high quality tools. You need high quality tools if you're going to get high quality results. So let's go back to this chart 22, Peter, if you can.
This one.
22, number 22.
Oh, slide 22. There we go.
Yes, sir. Okay, what you're looking at here is a power pattern I developed in it was 1985. It'll work from a 1-minute chart all the way up to a yearly. It is absolutely amazing. It requires thrust as defined by the 3x3. The 3x3 is the 3-day displaced moving average, move forward 3 days. Once you define the thrust and we break down through the thrust, we have usually 3 days below the 3x3 in order for that market to support. You start looking for support, and the objective is where you see the exit. Often it'll exceed the objective by a little bit. Now, Peter, can you go to chart number 28?
28. There we go.
Okay, now there's your objective. I believe that's the NASDAQ, a monthly or a quarterly chart. Your objective is 143.67, and we met that objective and we exceeded it. Now, in addition, we had the same pictures on the S&P and we had the same picture on the Dow. We met and exceeded that. Now, what you need to understand is this pattern was developed in 1985, and here in 2022, it's working perfectly on a high time frame. Now, that's longevity, and this thing works. This thing is dynamite. When I watch a lot of podcasts. I don't watch technical analysis podcasts on the market because I don't think there's anything that can touch what we do. But I watch other podcasts, fundamental podcasts, a lot of stuff on the Fed and on repos. And these people go through all these details and they don't give you anything actionable. Well, I'm going to give you something actionable right now. Not that I'm making any recommendation for you. This is educational, but I'm going to tell you what I would do because I can talk about that. Now you see this number 143.67. That is what you call a revisit. Now a revisit is going to take an hour to explain, but basically to do it quickly, you will revisit that number and you will have support. It actually gets back to Stottlemyre stuff on market profile. But like I said, there's too much detail for now. What you want to watch is you want to watch this 143.67 level on the NASDAQ. And this is your key level. Even with a war going on, we're not breaking below that level. Until we break below that level, you cannot get aggressively short the market. Now, personally, I'm 80% in cash. I was about 70% in cash prior. I'm about 80% in cash now. I dumped some stock just yesterday. I'm short. I have a nice short position in the remaining 20%, and I am still long some stuff. Before I get aggressively short, I have to see that this number is broken. Now, with some luck here, you can't see this, but on my own computer, I have the same numbers for the S&P, and I want to give you that number because this is truly an actionable number. And we briefly got below this number. We climbed back above it just a week ago, but the number is 4309. That's on the quarterly or the monthly NASDAQ, S&P futures. And so that's what you want to watch. If we can get below that number, that is your indication that this market is pretty much done. Now let's see if I can find. I have the same number on the Dow, the same pattern on the Dow. And the Dow number, which we just barely climb back above, and that is 3378. This is an actionable number for me. this is getting below this revisit level is incredibly important. It goes back to the whole idea that this pattern was built on. And if we can get below that number, I think that's a signal to get aggressively short. Now, I'm going to give you some other numbers here. Sorry, we don't have the charts. We're going to try and get them on the website for you so you can actually see these charts, but we weren't able to get them in the presentation today for a variety of reasons. When the S&P, we're talking about now the S&P futures, if we break below the numbers I was just talking about, we should go down to 33.26, between 33.26 and 31.80. That is our projection for the downside. And I will be a buyer down there. I will be a buyer for a bounce. I do not expect that to hold. Currently, I think the level the market will reach on this down move will be 25.21. All this comes from the stuff that Peter was teaching you already. So I've given you some actionable numbers. Of course, it's educational, actionable for me. And there's just one more thing I want to tell you. Don't have a lot of time, but it's just really important. And this goes back to how the market. I've been trading since '67, right? Back in those days, I'd say 67 to about maybe 2005, 2008, somewhere in that vicinity. You could watch the market reaction to an event, and you could see, and you could depend on it, right? Like right now, we got a war going on in Israel, got another war going on in Ukraine, and these things, it's not the last of it. I mean, we got some issues. It's going to get worse, in my opinion, much worse. So where am I going with this? Right now, the market's holding. It's actually holding pretty well and going up. Now, if it was 1990 or 2000, I would say, wow, that's a real solid indication that we've got a market that's solid, because it is actually holding when you get this terrible bad news. Okay, that's not the case anymore. Now, how do I know that? I was in Bangkok. I got a place in Bangkok, and I was in Bangkok in January of 2020, just when the pandemic was hitting. And I've got a lot of friends in China, I got friends all over Asia, and they're calling me and going, hey, this pandemic thing is horrible. I mean, this is really bad news. At midnight, they were spraying the streets in Bangkok with this misty stuff. This is in January, right? Well, the market's still holding up. I'm looking at the market, I'm going, what the hell? I'm short, and it's just holding up, and it's holding up, and it's holding up. And I'm going, why is the market holding up? It's crazy. This pandemic is going to be a real problem. Well, kept my short positions on for a while. And finally I said, hey, too much. This market is telling me that things are good. Things aren't going to fall apart. So I took off my shorts. And then, of course, we had the crash. And I don't have to tell you what that crash was like. It was incredible. Yeah, I didn't manage to get short, but there was a real delay. So what I'm saying now is, there's a delay now in what's going on. I mean, this Mideast thing could really spin out of control. In fact, I did a market letter, which if you want to email me, not a market letter. I did a posting on the forums. And if you want to email me, you can get that. But it was prophetic. I had comments in there about what's going on with the Middle East. That's just one thing I had in there. So if you want some political commentary, I'm not going to do it here. I'm not going to do it now. But you're free to email me and ask about that. Just go to my website, fibtrader.com, and you go to the contact area. You'll find my email address, and you can shoot an email to me. Peter, I'm done. Do you want to give the folks the offer that we have come up with, and then maybe we can answer a few questions?
Yeah, let's do that. I see one or two questions already coming in on the chat. Okay, so for the attendees today, the listeners, that's the recommended learning path. Let me go to the special offer. There we go. So if you purchase the book, Trading with DiNapoli Levels, for a special price of $99, it's usually $162. It will include free shipping in the USA and South Africa. If you're somewhere else in the world, you need to add $45 on top of that for shipping. If you purchase that book before midnight, this offer closes midnight on Sunday Eastern Standard Time, there's a couple of free things that will include. So you can go to that order form. Let me paste that into the chat as well. So there you go. I've pasted that into the chat. You type in, you go to the MISC section of the order form, you type in CIS Ninja discount package, and you submit your $99. We'll send you the book. And then after you purchase the book, you have 60 days to access the following for free. A free trial to the DiNapoli indicators for NinjaTrader. We can go and look at now and see if the markets have moved on that oil, but I doubt something would have happened. I would have liked to demonstrate it live on some live markets that's more active. You also get a free 60-day trial to the Trader Forum, which Joe talked about just now, and you'll get a free 30-day trial to the newsletter we do. So that's, I would say, a hell of a deal. So go to the MISC section of our website, and then you just submit that discount package, and we'll send you the book. And then once you're ready within 60 days, you can access these products we've got for free. So that's it. I think let's move on to questions. I'll see if I can find any questions here. Oh, there's a question, Joe. Has the book been updated? I think that's a good question for you.
We're in the third printing. Yeah, we have not had an update since the third printing, but we're in the third printing, and the book is absolutely current. I mean, the bread and butter pattern, for example, 1985. It's in chapter 6 of the book, and it's it just happened last year. So the book is very up to date in terms of its usefulness, and we're in the third printing. If anybody buys a book, to get the latest printing. There was also another question in here about the number that I mentioned on the NASDAQ. We don't have to have a monthly close. If we just get down below it, and we stay there for several days, take a look at the E-mini and the Dow and see if they're below also. I mean, this, to me, that's it. That's it. We're done. Sayonara. See you later. We're done, and we're on a long way down.
Okay. So someone says they're only seeing a 3/4 of the slide. Can everybody see the special offer? It looks good on my screen.
Looks good here too.
Yeah, there's a question: how much is the indicator set after, if you want to continue with it, let's say going on and you read the book? The indicators is $80 a month. We won't ask for any credit cards or anything to activate your free trial. You can try it out for 30 days. If you're happy, you can continue, and then we can move on to payment details. So $80 a month for the indicators in Ninja, which I think is pretty good, since Ninja do offer free charting and even free end-of-day data.
Peter, there's also free access to the forum, which is normally $40 a month, and you get that free.
That's right. Yeah. Included in the DiNapoli indicators for NinjaTrader, when you're a subscriber to that, the Trader Forum is included in that for free. So that's actually brings the cost down to around $40 for the tools if you add the free forum access as well. So that's not bad. Just want to see here any other questions. You have 60 days showing for the indicators. Yeah, after you purchase the book, you have 60 days to access. So you need to contact us within 60 days after purchasing the book to activate these free stuff. So the trial on the indicators is 30 days. The trial on the forum is 60 days. And the trial on the newsletter is 30 days. So I would recommend, when you purchase the book, you read it and then read it again. And then let's say around day 59.9, you contact us and say, hey, okay, I've read the book 2 or 3 times. I want to access my free stuff. That's the best way to do it. So yes, just quickly want to show the website as well. There's the website fibtrader.com and fibtrader.co.za. They also have
Peter, can you pull up the order form?
Yeah, I'm going to do that now. I see we've got a question on that, Joe. Let me pull that up. That should do it. So this is how the order form looks. I think I did paste the link there, but there's the link once again. Then you can scroll down and you'll see the miscellaneous section at the bottom. You'll just select that, you type in 99 and you'll type in the CIS Ninja package. We'll know what you're talking about. So yeah, that's the easy way to do it.
If you miss the offer, I hope you don't, but if you do, the book's available on Amazon. You'll be paying $162 for it, but you know it's available there. At least you can get it.
Yeah. Okay, someone's asking, what if they already have the book, Joe? Can we give them a trial? I think they should send us an email on that. We'll take it further. So there's my email on the screen. Please send me an email. And then there's a lot of bearish quarterly stuff going on the stocks. Yes, that's exactly what Joe's been talking about. That's one question. So especially if we move back below those revisited nodes that's been holding, that's where you need to be very careful.
It was about 3 to 4 weeks ago when the market was very close to its recent highs. I was on a podcast and I told people that revisit would present quite a substantial tradable bounce, and it did exactly that. For those of you that have studied Stottlemyer's market profile, I mean, this is partly what these revisit numbers are based on. And you know, so if you're familiar with that, you'll get the concept of revisits. Basically, to be real quick about it, basically what's going on here is there's a whole lot of trading at certain levels in the market. We see it all the time, but most people don't know why they're trading at specific numbers. Well, what Peter has showed you today is why the market supports or resists at specific numbers. The algos go out there and they figure out where all that volume is at these specific numbers. They don't give a goddamn that it's a DiNapoli level. They could care less. They just know there's a lot of activity there. We know why the activity's there. All right, so what happens is you come back to those levels and it's called a revisit, and it presents, pardon me, I got some dental work just done. It presents tremendous support and resistance on a retracement, like the numbers I showed you in that pattern. And those numbers are highly tradable. And if we break below it, it shows that we've broken back below that support. And we're not talking about numbers on a 1 minute chart. We're talking about numbers on monthlies. We're talking about numbers on quarterlies. These are big, powerful things.
Yeah, definitely. I see we've got 1 or 2 minutes left, guys. So any other questions? There was another one on the book, Joe. When did you say was the last time it was updated, or is the third revision now, or what?
It's the third. It's the third revision. I don't remember what year that was. Sometimes somewhere in the 2000s. But the book is still being printed. I mean, we're still selling licenses for the book to be printed. We just sold a license in Brazil. We sold a license in Thailand. In China, they can't keep the book on the shelf. I don't know how many printings, how many thousands and tens of thousands of books there are, but they were actually selling for a premium because people couldn't buy them at the bookstore anymore. So
let's quickly look at, before we go, Joe, I want to show the tools, because we had a jump in earlier. Remember, we had the normal retrace tool like that drawn. So oil made a new low here on the 1 minute, and look at what the tool did. It jumped automatically, drawing the fib nodes lower like it should be. So you don't have to hassle yourself by updating the fib node the whole time. It does it automatically, and then easy to move around. Even if you miss something, you can move the focus point around. You can delete it quite easily. So it's not the best demonstration. I would love to do it in a more live market if NinjaTrader gives us the opportunity next time. But yes, it's at least nice to show that.
Well, what's really critical, and you can't see it in this demonstration, but what's critical is where you get 4 or 5 market reaction points. And so if you got 5 reaction points, you got 10 fib nodes, and they all move together.
And it's so quick to
you know,
draw them. You just click, 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 click. I mean, that's just quickly doing it. But yeah, you can't do it with the normal retrace tool. It's way more clear. I would love to demonstrate that again in a more lively market, but this is about the time we have for today.
Look, these tools, MECD predictor, there's also an oscillator predictor, DiNapoli retrace and expansion. These two tools were not developed to sell. They were developed by me in 1986, 1987, 1989, and finally programmed. It took us a long time to get them programmed in a computer because computers couldn't do it. And I mean, they were developed for my trading. And like I say, you know, I've traded as I'm one of them. I'm very experienced S&P trader. And so that's what they were designed for. They weren't designed to sell to people and make some money. They were designed for trading.
Yeah. Yeah. Well, that's it. Thank you to NinjaTrader for giving us the time here. Patrick, I don't know if you have any last words.
Thanks again, Peter and Joe. Really appreciate it. Thanks for taking the time to share this with us today. Yeah, like Peter said, we'd love to have him back in the room here. So for everyone in attendance, you will receive an on-demand recording of today's event. So keep an eye out for that email if you registered. If you enjoyed today's session, we hope you'll join us for future webinars. You can follow us on social media for alerts on upcoming events and other NinjaTrader ecosystem news. So I'm going to go ahead and share my screen here. Just a few last items here. I'd like to remind everyone that the information provided here was that of Coast Investment Software, fibtrader.com, and not of NinjaTrader. So all information was for educational purposes, as Joe explained, and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars.